One of the things that I want to talk about is building your wealth plan for your retirement worth having. Because sometimes I think there's a lot of confusion of, well, how much of my portfolio should be in real estate? And listen, I'm not one of those guys that says your entire wealth should be in real estate or crypto, God, no crypto, or stocks or bonds or savings accounts and those kinds of things. I want to talk about a mix. Let's keep a couple of things in mind right from the very start. One is I'm a real estate guy. Two is I'm not a certified financial planner. Three is all I can tell you is I've stayed at a Holiday Inn once, okay? But this is the way that I'm choosing to build my portfolio, and this is the way that I've seen a lot of success from for a lot of my clients. Stick around, watch the math. All right, so let's break down some of the math of what we're going to talk about in our particular scenario. Remember, this is just a scenario. You can change it for your needs. You want $20,000 a month in retirement? All you're going to do is work through the same formula that I'm giving you now. If you want $5,000 a month, but we're going to formulate $10,000 a month in $2,025. And if you've been paying any attention to inflation the last year, that could erode quickly. But what we hope is that our investments will go along with the inflationary scale. And over time, they tend to do that very well. Here's where I'm going. Let's just say that you're looking for $10,000 a month in total income for your retirement. And you and your spouse, because I'm going to work this as a couple, however you want to break down that couple is up to you. But what I'm going to say is that you both have been filing your taxes. You've actually been contributing to the Social Security. And so the average Social Security in 2025 paid out was $2,008. So for our scenario, I'm going to say that one of the spouses, 10,000 is what we need. One of the spouses is going to get 2,000 and the higher earner, because a lot of times if you've got the money to buy real estate investment property, you're a higher earner, is getting about $2,500. You can find this out by just going to Social Security and registering an account, and you can see exactly what track you're on and what your earnings will be in today's dollars. So I highly recommend you just pause the video right now, go look that up, and then come back to the video, and that way you'll have numbers of your own to plug in. But in our scenario, $2,000 a month is going to come from one spouse, $2,500 is going to come from the other spouse. And so what does that leave as far as your gap in your earnings? Well, you've got $4,500, which means your gap is $5,500. Follow me so far? You're going to be $5,500 short of your $10,000. Well, if you've had the income to really consider buying real estate investment properties, rental properties, what I want you to do is also think about what you're building up in either your 401k, your pension, or whatever. So for our particular scenario here, I'm going to say that you gathered $500,000 that you have put into your 401k or just the stock market. Like maybe you have a Fidelity account or a Charles Schwab account, and you've just gathered $500,000 outside of a retirement vehicle. But if you have that and the average after inflation return is 7%, which I think if you invest wisely and do a little bit of homework, you can come close to that, then you're going to be getting around $35,000 a year without touching the principal. Follow me so far? So if you take that and you divide that by 12, you're going to be getting about $2,900 a month in investment return without touching that principal. So if you take that $2,900 a month and you subtract it from here, now what we have is we have a gap of $2,600. Make sense? So we're still not going to have the retirement we want, but we have closed that gap with our 401k or some sort of an investment account and our Social Security, if you believe it's going to be there. And by the way, I'm not a fear-based person. I actually believe it will be there because the riots would be unbearable for the government. That's just my personal 2 cents on that. So now, how do we fill this $2,600 gap? I'm a big fan of real estate. And I don't generally recommend, like most of the people that we manage homes for at Astra Realty, most of the people that we manage homes for own about 2.5 properties, 2.5. We have one at 57, we have one at 44, we have one at 37, okay? But most own onesies or twosies or threesies. And if you just have one rental property, I want to work the math for you. Let's just say that you have a $380,000 house in today's market in Johnson County, Kansas. And that house is getting $2,500 a month on rent, right? What I want you to do is I want you to take that $2,500, I want you to multiply that times 70%, okay? So times 0.7, and you're gonna come up with about $1,750 in income. So let me slow down there just for a second. $2,500 in rent, there's a 30% cost of having that property. Either you're paying property management or repairs, all the different things that you pay for in a rental property. And you might say, Chris, well, mine's really closer to 60%. Okay, well then use 2,500 times 0.6. But for our scenario, let's just say 1,750, but to make my math easier, I'm gonna say $1,700. Now we are $900 short of our retirement. So what do we do? What do we do? You can either pump this number up, or you can go through and you can go out and buy a second property. And a second property will actually take you into a plus $800 excess. And I think you'd rather have an $800 excess. Now, some of you are screaming at the camera right now, what about PI and TI, principal, interest, taxes, insurance? Well, how old are you? How quickly could you get this house paid for? What if you deferred a vacation a year and only took one instead of two? What if you drove a Subaru instead of a Mercedes? What would it take for you to have this house paid off by the time you retire? If you're watching this and you're 32 years old and you've got a pretty high income, that's going to be easy. Time is your friend. But if you're 45 or 50 years old, you're probably going to have to make some sacrifices now to live the life you want to live in your retirement so that you can have your retirement worth having. Does that make sense? What I want you to do is think about real estate as a part of your portfolio, not necessarily all of your portfolio. I'm not one that says you should have all of your money in the stock market or savings or bonds or whatever it is. I'm also not one that says all of your money should be in real estate. I believe in diversity, and I believe in that diversity because if something happens somewhere, then I'm still okay somewhere else. It's just my personal philosophy. I'm not advising you on your personal situation, but if you want to talk about real estate, my name is Chris Lindquist. I work very closely with our team, Jimmy Geisler and Ashton Flores and Tasha Morant and Luke Wright and Matt Johnson. And we help people create their retirement worth having with real estate in their portfolio. We would love to talk to you. Have a great day.